All right, there we go. Should be good. Good thing I always do those audio checks. All right, you guys hear me right? Let me do audio check here on my end. All right, we're good to go. All right, guys, hope you're all doing well. Happy Sunday. Did we get some targets delivered last week or what? So with that, guys, let's go ahead and break it down. Now that we've got several targets delivered in dollar indices, absolute cratering of the stock market. And while everyone was running around like chickens with their heads cut off, oh, Trump, tariffs, this and that, smart money's calm, cool, collected, predicting the price runs and just letting the news be the smokescreen to deliver what we were already expecting. Damn, does it feel good to be on this side of things. All right, guys, let's go get into what we're looking at here for this week. Hope you guys are looking good, doing well. Things are looking good here on my end. I will be getting back to business this week after some personal things that I had to deal with this past week, prevented me from really engaging a whole lot with the markets last week at all. So that's something I'll touch on here in a moment as well. But personal life prevented me from being too active in the market, so I will be back to business this week, and it will be business as usual. So hope you guys are doing well. Hope you guys are doing great this Sunday. Major Life, hello, good sir. Hello to you as well. Michael, Black Panther, hello, hello. Richard, what's going on? Alistair, Jeff, good afternoon to all you guys. My man James from Kenya, glad to have you. Cleo, thank you very much. All right, guys, so let's go and get into what we're looking at here for today. First things first, we'll discuss the economic calendar briefly. We do have CPI and PPI Thursday and Friday, so do be mindful of the heavy-hitting news that we do have at the end of the week. With that being said, though, with the climate that we're in, basically every day is like a high-impact news driver, right? Every day we're seeing major range expansions to key targets. And the reason is very simple, right? There's a lot of money on the table right now, a lot of investments going through the markets, and there's a lot of money to be cleaned up, right? So with that being said, we'll go ahead and get into what we're looking at here. We'll touch on a little bit about how they use the Trump news on Wednesday to accelerate the markets into the targets. And that's kind of what I was mentioning earlier in the stream, which it's good to be in the know, right? Because when you see the 90% sheep have no idea what they're looking at, no idea how to assess price charts, they're thinking, oh shit, tariffs may be bullish, when in fact everything we were looking at in the charts, absolutely nothing was bullish in the market. And then of course they use the news as the excuse for the target they were already going to take it into. So that's why I was mentioning earlier why it is good to be on that side, because at least we're not here swimming in a bunch of confusion, hoping and praying that the market's going to react a specific way. We know what we're looking at, the market's going to communicate it, and we take it step by step from there. So with that, guys, let's go and get into the business today, what we're looking at here for US dollar. So dollar last week, we covered this weekly fair value gap, more specifically this inversion gap here. So what do you notice here? There's two key gaps. This inversion gap here, which we traded up into, and we see the market failed to even get to midpoint. What does that tell you? Market's weak. Also, we have this gap here. Market traded up into it, couldn't hit midpoint of this inefficiency as well. Also signaling what? The market is heavy. So if it's heavy, what does that mean? We're going to get large down close candles. We also have a doji here, which in the proper context is very helpful for a reversal pattern. I'm not a big proponent of just looking at the pattern by itself, because if you don't know what you're looking at, you're going to get smoked trading anything. But if you know how to read price action, like I'm sharing with you guys here, and then you see a doji in the proper context, it signals that we're going to see a reversal to the downside. So we saw a nice repricing lower into this weekly gap here, which we were looking for, and you notice they priced in right near the low of that, just a few pips away from the low. And as of right now, everything still is bearish to me, so I'm still looking for sell side here. Again, all things we covered last week, so we're going to go ahead and breeze right through this. But again, I want you guys to take note of the details that allow you to predict a large range weekly candle, right? Which is all these weakness signatures here that I just took your attention to, which again is not after the fact. You can go and look at last week's Sunday live stream as well and see that that is indeed what we were looking for. All right, working down into the daily chart here. Let's go ahead and get this on here. All right. So all signatures that communicate the market's bearish, right? 3 fair value gaps. The upper one's a breakaway. Couldn't even get to midpoint of this one. That was our measuring gap. And then from there, we got a nice displacement to the downside. So what I'm watching right now going into this week is we have this daily fair value gap here, as well as this bearish breaker, right? So as long as we remain below that, I'm still looking for lower prices and wanting to see the market rotate into these lows here to the downside. Tell me, Samad, happy Sunday to you guys. What changes the bearish bias for me is if we trade through this breaker and fair value gap. If we get above that on a closing basis, then I will turn my attention to likely higher prices or become neutral depending on how the market's delivering at that time. But as long as we remain below these key levels, we're looking for further downside. And I'm going to show you guys how we confirm the drop in dollar with the treasury market as well. Alrighty, so hourly chart from here, let's work down into the lower time frame. So we have a dealing range here on the hourly chart, this high to this low. Market traded up into a short-term premium. So what I want to see from here going forward is how we trade inside this daily fair value gap, which is that gray rectangle, and the bearish breaker, right? So the market's traded up into a short-term premium of the dealing range. How we trade here will give me a great deal of insight going forward into the next, say, week to 2 weeks. So if we sell off from here, looking for this low here, and then again, all these downside targets here below. All right, so I believe that's it for dollar. Let's see. Yeah, and then just want to touch on a little bit of what I gave you guys last week here. Whoops, I don't want to do that. All right, so going up to the hourly chart and going up to the price action that we saw last week here. We trade up into that weekly inversion fair value gap. Told you guys we'd see this market maker sell model here. While it was a little sloppy, waiting for the big event on Wednesday. Again, don't get fooled by news, right? News is just designed to get that sell side on here. The news is just designed to trip up the small fish. People that don't know what they're looking for. The mainstream media, the news outlets, they'll float out narratives. The market's bullish. Trump tariffs has already been priced in. The market's going higher. I don't really pay attention to it. I do like to see it because I do like to see what the sharks and what the big fish, what they're feeding the shrimps and the small fish, because it helps me get a narrative, right? So if we're already looking for lower prices and I see JP Morgan saying we have the buying opportunity of a century, buy the dip, buy the dip. And I know how the average folks are going to read that, right? And they're going to see that, oh, well, the stock market should go higher because I'm sure JP Morgan, they're going to tell me where the market's going. And of course, you know how that goes. So saying that to say, what were we looking for last week on the dollar? Market maker sell model, right? So the news on Wednesday was just the catalyst to take it down into those targets. They did hold it, but we see what? The market respecting the fair value gap here, the 3 up closed candles, that's a bearish order block, market respecting these key levels. And then when it's time, they sink it into the already existing drawn liquidity. All right, moving over to bonds. So what allowed me to trust higher prices in dollar? That takes me to the bond market, right? So last week we covered the weekly fair value gap that we were trading in here. Market dropped down into it, nice rejection to the upside. So what you guys are going to start seeing is a common theme in my analysis. What I do when I'm analyzing one market is what I do on all markets and on all time frames. So it doesn't change. So you're going to see a lot of repeating characteristics in what I'm looking at in price action. So we have a weekly fair value gap here, market traded down into it, couldn't even do what? Get into the lower half. What's that telling you now is smart money joining these live streams? The market's bullish, right? If it's bullish, we're going to see what? Big expansion to the upside. The opposite of what we saw in dollar, right? So what allows me to trust dollar would be repriced lower is the fact that we're going to see bullishness on treasuries. And I have this labeled inversion fair value gap. I know it hasn't yet been confirmed as one, but I do want to see if we can start to work above that gap and continue to work towards the buy side. However, I will monitor how we trade inside this key level on the 4-hour, daily, and hourly charts to get indications as to what signatures they're going to give here to see if they're going to continue taking this market higher or if we are going to see a potential reversal point here inside that weekly imbalance. But nonetheless, higher bonds, lower dollar. All right, working down into the daily chart last week. Last week we covered the S&P, right? So we had that weekly fair value gap here, which is that blue rectangle. The market traded down into it and took out stops. Market traded down into it and took out stops. But we did not see an agreement here with a lower low. In the proper context, when you know what you're looking for, as I was covering, the market was bullish last week because we saw what? An S&P divergence inside of a key weekly fair value gap that sends price higher. And it's no surprise why we saw the absolute murder of the US dollar last week, because again, the bond market is supporting that. So not going to touch on euro or pound today. I got things to take care of today, so I won't be going into too much of that. But for those of you guys that are trading currencies, I'm sure you guys absolutely slaughtered it last week because you know what you're looking for: lower dollar, currency higher. So let's go ahead and move into good old NASDAQ. So before I get into the continuous contract, I want to just touch on what it is we're looking at last week, right? So we had this daily fair value gap and this breaker I gave you. So as long as we remain below that, market's going lower. Respected it, did color outside the lines a little bit, but that's to be expected when there's so much manipulation, especially on a day like Wednesday, when they are using Trump tariffs as the catalyst to reprice the market to where they were already going. And the market even overshot my expectations a bit last week. Daily fair value gap traded up into that, selling off as expected. First target I gave you here, second target here, and then they just absolutely ripped the market on through all of these targets. So market's likely going much lower, and then these targets were again based off the weekly chart that we were seeing here. But now what do you notice? We don't have a lot of data to refer to here. So now what I'll do is I'll go to the continuous chart and we'll go ahead and pick up the analysis here. All right, so let's go to the monthly chart. Let's give some macro perspective here. All right, so monthly time frame, you see the monthly candle open traded higher into the last 3 up close candles. So these 3 consecutive up close candles is 1 up close candle on the 3-month chart, right? So that's why that's going to be a bearish order block. Trade up into that, hit that, nose diving, equal lows is the draw. Through these lows here, we have this low here, which you'll be able to see on the weekly chart, which we'll now work down into. So we see fair value gap here traded into, respected. Also, if you extend this fair value gap through, that is an inversion fair value gap. So because we close down below it, trade up into it, you see how it uses it as resistance. Market works lower. Equal lows here is the draw. And then through that, we have the sell side back here. As of right now, again, nothing is bullish in the stock market as we covered last week. This is a breakaway gap here, right? This fair value gap here respected, signaling that we're going to see aggressive expansion lower on the weekly chart. All right, dropping down into the daily. Let's go ahead and zoom out here a little bit. Oh, and for those guys that are wondering, I have adjusted turned off because what turning off adjusted does, look at this price range here. Let me turn that off. Now you'll see there's no gap in here, right? When adjusted is off, now you see the roll gap from when we transition from one futures contract to the next. These are roll gaps here, here, here. And I like to see those because then it reflects the true pricing of the previous month's contracts. So relatively equal lows here is the draw for NASDAQ going forward. And then through that, we have this sell side down here, which also overlaps with this inefficient price delivery. So those are the downside targets as long as we remain bearish. I don't see anything bullish in this market. And again, because we're so close to these lows, we'll likely see a gap down is what I'm suspecting. And then looking for the market to trade down into those levels. So I will be active this week, trading probably Monday, Tuesday. And then Thursday, Friday, we have CPI and PPI. So those will probably be the 4 days I'll be getting to work here this week. All right, so that's the business there on the, let me touch on one other detail here. So this gap here, if we leave that open, then that can be treated as a measuring gap, and then we can see much, much more downside on indices. One of the things that still has me bearish, so before I go into the lower time frame hourly chart, let me continue sharing with you guys what I'm looking at here. I don't think the sell-off is over in the indices yet. I still think, well, think of it like this, right? The market's bottom once nobody wants to buy it, right? So think of good old Bitcoin, right? Let's look at good old Bitcoin here. I know a lot of you guys are excited. He's talking about crypto. All right, so when the market was at 67K back here in 2020, going into 2021, everyone wanted to do what? Buy Bitcoin, of course. They do what? They sink it lower into 15 grand, and then they hold it there for almost a year and a half. Nobody was interested in buying cryptocurrency here. Well, I wouldn't say nobody, but very few, right? Especially the street money. No one wants to buy it here. That's when the market's then going to reverse and go higher. So you just want to understand human psychology, right? Up here, everyone wants to buy it. They sink it. Now nobody wants to buy crypto here. Smart money is going to accumulate that discounted price, and then they're going to send it higher. What do we see here? Consolidation inside or above, zooming out here, all-time highs. And then we see the consolidation range here, right? Who wants to buy crypto at 100K? Uninformed money that doesn't know what they're looking at, so they want to buy expensive cryptocurrency. And then what do we see in here? The money to be made is on the downside, right? Uninformed money bought up here, whether they're buying bull flags or whatever it is they're using, and then they're going to sink it lower. So there's still max pain on the downside for NASDAQ using that understanding, right? So if people are still wanting to buy, and a lot of people are, I see a lot of people saying, well, now I'm buying, I'm adding to my long-term portfolio. I see JP Morgan rolling out news articles about now is the best buying opportunity. There's absolutely nothing bullish in this market, right? If you're a long-term investor, and I know it's a very different game than the game traders are playing, but still, even as investors, you can still buy with confirmation, right? You can still short with confirmation. So a knife that's falling like this, in my opinion, is not a buying opportunity at all. So want to keep you guys safe. I know many of you guys have 401ks, many of you guys have investment accounts that you probably don't want to go to zero, right? So these are important things to take note of, and also maybe learn how to read yourself so that you can protect yourself, while most in their 401ks that have just been hoping and praying it's going higher, they're getting taken to the slaughterhouse. And it's because they, unfortunately, are falling victim to the misinformation that's out there. So don't let that be you. If you're here, I'm going to make sure of it. So let's drop down into the hourly chart here. Now that I covered all that, I still think we got much lower in summary on the stock market. Nothing's bullish, and people are still saying they want to buy, which tells me they're probably going to keep sinking this thing much, much lower. All right, so looking at the hourly chart here, let's go ahead and take off this level here. Really, really nice breakdown. I mean, we see inefficiencies here traded up into, not being respected, or not even being able to trade up into the midpoint, respecting all these levels. Up close candle, respected, breaks down, imbalance, left open. Fair value gap here, we traded up into that on Friday. And then we see the market show no ability to even get to the midpoint, signaling it's really heavy. And then we just got continuous sell-off after sell-off last week. So I'll be looking for continued downside again into these targets that I covered here, and all the way down to the 16,000s if we really start to accelerate below those lows. Looking at the other markets here, let's look at S&P. For S&P, it's going to be the same deal. We've got this equal low here, which was delivered. And now we have this low down here, which I suspect will be the next draw for S&P. Looking at the Dow Jones. Fair value gap here, traded up into it, respected it, up close candle, traded up into it, respected it, equal lows here is the draw. So we have these lows here, and then we have these lows back here. So I suspect we'll likely see 37,000s for the Dow Jones. Alrighty. Man, they're just sinking Bitcoin. So Bitcoin, as we covered last week, I know I'm covering the markets that I already anticipate you guys are going to ask me. So we had this daily fair value gap we've been watching here on Bitcoin. Told you guys watch that, right? Look at the bodies. The wicks, yeah, they can trade outside of it, but the bodies are telling you what? It's still bearish. So people that are trying to say that crypto's in a good buying opportunity right now, like I said, don't just trade blindly, right? Even if you're investing, like I said, I know it's a different game. I know, well, Dylan, you're a trader, right? So investing slightly different, of course. But still, you don't want to invest in something that's going to keep sinking. So wait till you get confirmation of bullish price action. Once it indicates a potential bottom, then you can start to either start scaling in or adding into long-term investment positions. And of course, none of this is financial advice, just what I would be doing if I were investing. And again, purely educational. None of this is financial advice. But again, if you have been taking the advice I've been given, many of you guys have been saving yourself from the slaughterhouse in the Bitcoin crypto markets and the stock futures as well. Ethereum, bearish, absolutely nothing bullish in this market here. And let's get some targets for Ethereum. I think we'll see Ethereum back down below $1,000 a coin, sell side here, and that nothing is bullish in any of these markets at all. And then I suspect we'll see crypto or Bitcoin follow suit. XRP, let's look at Binance. So again, I called lower prices for XRP last week for you guys, and equal lows here and here, still on the agenda. But remember, I taught you guys that are monitoring cryptocurrency. Why were we able to look for lower Bitcoin, or sorry, lower XRP? Because Bitcoin, the main asset in this asset class, is selling, right? So you're able to use that intermarket analysis to have more clarity with regard to what you're looking for, right? So everything seems pretty straightforward to me on my end. Maybe take a few questions and I'm going to go ahead and get going. Appreciate you guys joining us here today. Looking to keep this one light here. I'm sorry to hear about your grandma, Dylan. Make sure rest in peace. Thank you very much. Really appreciate you being here with us. Yeah, my pleasure, guys. Kevin, happy Sunday, Dylan. Sorry for the loss. I hope you managed in these hard times, brother. Praying for you. Really do appreciate you guys. Massive respect for still being here with us. Says a lot about you, brother. Keep your head up. Appreciate you, Kevin. Thank you very much, my man. Alessandro, that 1711 you marked on the continuous contract is still a valid goal for NQM. Yeah, it's the same thing, right? So if we're looking at this here, it's still the continuous contract that we're watching, right? So yeah, it is a still valid level, even if you're looking at the current contract. It's the same thing. It's going to be the same price because the continuous contract is pulling its data from the official contract. So they're going to be the same thing. Can you take a look at Solana? Yeah, let's take a look at Solana. Yeah, much lower to go on Solana as well. Like I've been saying the past couple weeks, whichever crypto currency you're trading, especially if you're trading like altcoins and stuff like that, monitor Bitcoin and Ethereum, right? So you'll see BTC, Ethereum selling off. You're going to see your other currencies fall off as well. So relatively equal lows here. delivered, and then we'll look for a downside here. Let me go to the monthly chart. Yeah, so monthly chart, we have these smooth lows here. If we accelerate through that, we have this fair value gap here for Solana. But lower prices on all crypto is what we're seeing. And they're actually selling it off on a Sunday, which is interesting. Do rollover gaps also behave like fair value gaps and liquidity voids? Really good question. Absolutely. So looking at the roll gaps here, let's just use the ones that are visible to us. So that's a roll gap here. And giving away all my secrets here. And then you see this one here. Extend that through. And then you'll notice in your lower time frames, you'll see how the market uses these levels. Like here on the sell side of the curve, you can see this roll gap, trade up into it, respect it. But then when it's bullish, we get above that roll gap, use it. Here, you can see the market work in these levels. So absolutely, yeah, the roll gaps are like any other inefficiency. The algorithm will refer to it. So there's something else for your guys' back pocket there. Sorry for the loss. Appreciate you guys. Thank you very much. All right, folks, don't see any more questions here. Gonna keep this one short and sweet then. As far as oil cratering, looking for lower prices based off the news we got with the Trump tariffs, all these equal lows here. Massive sell side under all these lows. So now that we've taken out sell side, I'll be very interested to see what we do with crude oil from here going forward. Very interested to see what they do with that. All right, so let me see if there's any other markets I want to touch on. Tesla's going to keep getting smashed. We have sell side on Tesla here. Imbalance is being left open. Absolutely nothing bullish on these names. I see a lot of people wanting to buy the dip. But like I said, there's nothing wrong with that, especially if you're a long-term investor and maybe you don't know how to read the market. It just makes sense to buy that's dropping. Like I said, everyone has different strategies to make money. I'm of the opinion that if something's going to go much lower, why not take advantage of a better discount, right? So it all depends on what it is that you're doing with your trading, right? So Tesla, all the big names going lower from what I'm seeing. Apple getting crushed. Microsoft getting crushed. Yeah, so we got lower indices to come. So with that, guys, I will bid you guys farewell. And I will see you guys maybe on the live stream this week. We'll see how I'm doing since I wasn't able to do much trading last week. Probably going to be having to get after it this week. So I don't know if I'll be live on YouTube. And also a huge shout out to those that are in the coaching group, the mentorship group that I'm working with that have been working with me for about 3 months. My most successful mentorship class to date. Those that I'm working with, 3 of which have already been able to reach payouts for their first time ever, and much more actually also getting funding in less than 3 months, which for me is even surprising. Not surprising because what we do works, the system I give, the teachings we give, it works, it's absolutely money. But for someone to be getting results that quick in under 3 months is almost unreal. So big shout out to those of you guys that are putting in the work and making it worth my time and your time in the mentorship, getting payouts and recouping those investments quickly, and now on your way to net profitability in trading, right? So really awesome stuff. Keep up the awesome work, and huge shout out to those that we're working with. Also, last thing I want to let you guys know as well, in the Discord for free, in the free Discord of the section, free section of the Discord rather, you'll be able to see a personalized action plan consultation. You'll be able to get on a call with me. We'll be able to look at where your trading's at, where you're at with reading price action. Do you have a model? Do you have a trading plan? And do you journal and do you reflect? Because if you don't do those 4 things or you don't know how to, you're basically trying to be a trader on a hope and a prayer. And unfortunately, hoping doesn't work. So you have to have a real system, a real strategy to actually get to where you're at to be profitable. And it has to be a lot more than a wish, right? So for those of you guys that may want help with that, want me to look at where you're at, give you insight 100% for free, you guys can take a look at that in the Discord, and I'll be able to get on a call with me, one-on-one, face-to-face. So with that, guys, for those of you guys that want to take advantage of that, I will see you guys in the free Discord, and I'll speak with you guys then. Dylan, can I book another time? Are you available on Wednesday? Yeah, so for those of you guys that want to speak with me and maybe the times in the schedule don't work for you, you'll be able to reach out to my team, and then we can find a time that does work in my schedule and yours as well. Slim, a bit late. We'll watch the recording. No worries. That's why we make it available. Richard, thank you for all you do. Enjoy your rest of the day. Appreciate you, Richard. Thank you very much. Respect to these guys and your time. Appreciate you, Black Panther. Thank you very much. Yeah, appreciate you guys. Have a good rest of your weekend. See you guys on the next one. Take care, everyone.